In this video, we will see how to record business activities. After analyzing each transaction of the business, companies first record the transaction in a journal. A journal is a chronological listing of a firm's transactions, including the amounts, accounts affected, and the direction of the effect. It records the financial data pertaining to business transactions' debit and credit effects on specific accounts. The process of recording data in the journal is called journalizing. A complete journal entry consists of the date of entry, the accounts which are to be debited and credited, and a brief explanation of the transaction. While making an entry, we should keep in mind the debit and credit procedure. Let's first look at the debit and credit procedure of assets and liabilities. Assets normally show a debit balance, and any debits to a specific asset account increase its balance, and any credits decrease its balance. In contrast, liability accounts normally have a credit balance, so credits increase the liability balance and debits decrease the liability balance. Let's now look at owner's equity accounts. Owner's capital and revenue increase owner's equity, whereas owner's drawings and expenses decrease owner's equity. Owner's capital has a normal credit balance. Therefore, a credit increases owner's capital and a debit decreases it. On the other hand, owner's drawings, which has a normal debit balance, increases with a debit and decreases with a credit. Note that increase in owner's drawings decreases owner's equity. So, when owner's drawings is debited, it increases owner's drawings, but decreases owner's equity. Revenue accounts are similar to owner's capital as they both increase owner's equity. They increase with credits and decrease with debits. Expense accounts are similar to owner's drawings because they decrease owner's equity. Let us now look at an illustration to see how to record business activities. Ben Foster engaged in a few activities to establish his photography studio. We will see where each of the activities is recorded and also prepare the entries to record the transactions. Each of the transactions is recorded in the general journal. In the first activity, Ben opened a bank account in the name of Photo Gallery and deposited $7,000 of his own money into this account as his initial investment. This transaction will be recorded in the general journal by debiting cash, an asset account, for $7,000 and crediting owner's capital, an equity account, for the same amount. Note that an asset account will have a normal debit balance and an equity account will have a normal credit balance. In the second activity, Ben purchased photography supplies costing $2,100. Only $900 is paid at the time of the purchase, and the balance is on account. The transaction will be recorded in the general journal by debiting supplies, an asset account, for $2,100, and by crediting cash, an asset account, for $900. We must also credit accounts payable, a liability account, for the difference amount of $1,200, as this is the portion to be paid on account. This will also balance the debits and credits. Note that a liability account, like accounts payable, will have a normal credit balance. In the last activity, the company obtained estimates on the cost of photography equipment from 3 different manufacturers. This is not a transaction, so no entry is recorded.